Good evening, all. Ira Epstein with your financial market update, and this update is for the evening of Wednesday, September 28th, 2022. We're getting on at 6:30 in the evening. All right, what a day. So today was the day that the Bank of England decided to come into the rescue of the credit markets in the UK. And what they did is they, out of nowhere, decided that they were going to step in and buy gilts. They, like the U.S., had been preparing to run off their balance sheet, in other words, sell the assets they'd been accumulating during the pandemic. They said, no, we're not going to do that. We'll put that off to the 31st. Right now, we're there to buy gilts and add stability to the credit markets because they basically stopped working. They stopped working because you have the central bank about to tighten rates, and at the same time, you've got Parliament enact caps on energy, tax cuts. I can go on and on. It was a relief program that, if you think about it, Parliament enacted its own version of quantitative easing, and the central banks at the other side. There was no coordination at all, loss in confidence in what was going on between the two, and the markets punished everything by driving the gilt market dramatically higher. What took place when the Bank of England made the move was the gilts immediately crashed. In other words, yield came down. At first, it was about 50 basis points, and I was amazed at that. It just kept growing throughout the day. So it was a dramatic move. Here's the problem with it. Nothing changed. Parliament hasn't changed its way. The IMF today called on the UK and said, we're going to downgrade you. The ratings agency, Fitch, came out and said, this doesn't work. How are you going to pay for what you're doing? So we're going to see over the next days, and I use the word there very carefully, days, that somewhere somebody's got to start giving answers, and you can't have the bank just doing the rescuing, but they did it. They came out today, and that's it. What did it do to the American markets? Well, you see it. The dollar immediately cracked. What happened to our own interest rates? If you were up with me in the morning, you were, when I was doing my recordings, you were at 4% in the 10-year note. You ended up cracking that and finishing off at 3.73. So just like a Federal Reserve meeting where they lower an interest rate by a quarter point, that's exactly what took place in this market. That's the way to think about it. Is it going to last? Should it last? Well, the one thing that's happened in the U.S. markets is we have been in a prolonged bear move, a straight line move on the interest rates. In that, we have driven the dollar to crazy levels, very strong levels. In that, we have put a damper on every commodity. Anything bought in dollars is inflationary if you're not in the United States. Try to buy anything priced in dollars abroad as your currency markets were crashing. Let's face it, you're still at 97 and a fraction in the euro. The British pound is 108. It was 103.50 earlier. It gained back money because at least the Bank of England's there for support. This can't last, though, if the Parliament keeps going through it. The bank can't fight the government. It doesn't make sense. You'll spend all your reserves. Something's got to give, and that's the danger of what we're in. I've given you the quickest way to look at it, and that's, I think, where you're at on this. Now, for those of you that look at my report, today it leaves. I recorded a special report on stock indices and gave my reasons why you're right now going to get a substantial bounce in the market. If you haven't looked at the report, fine. It goes off our website at midnight Central Time. So right now, let's say we're approaching 6:30. 5.5 hours from now, you'll never get a chance to see it again. If you want to see it and see why I did what I did and what's the game plan from the bounce, that's it. The way to keep up with how it's going to work is in free offers. If you've never had my research, I'm giving it to you for 2 weeks. Give it a try. Just sign up for it in the free offers. Your call. You don't want to see it? That's fine. But it's all there for you to do it. And again, this is all on iraepstein.com. My name, no space in between it. iraepstein.com. Away you go. And as I said, after midnight, you will not see this report again. And thank God, I was right. It's that simple. The report was timely, right to the time that this all happened. But there's another leg to happen. Okay, we'll talk about that at another time. So let's go to the charts and see what happened. As the dollar fell, you drove up all the energy markets. They took off to the upside. You're back to $7 in nat gas. If you were in my morning subscriber video today, my subscriber video, what was I saying? As the market was at the Bollinger Band 200-day average, I said, you don't want to be short down here. This is where this market should grab hold. Bingo. It ended up doing that. Luck. Did I know today was going to happen with all this the way it did? Of course I did not. So let's go to the charts and see what we have. So here's the S&P, and for the week, it's flat. It's hard to believe it's flat, but it's flat. You're up 0.49%. When we look at the chart action, you had an outside day up today. Very important. A key reversal, some may say too. What's the difference between an outside day and a key reversal? I define it as taking out the prior day's high and low, but where you close in the range. On a key reversal, you're going to be near the highs of that move. An outside day, as long as you're higher than the previous day that you've taken out the high and low, could be just by a point. That's the reversal. That's the difference that I put on it. Now, something else happened on this. What do you think it was? Let's walk there and see. This is how you looked coming into the marketplace. Do you agree we have lower highs, lower lows in the market? And this is Monday. This is yesterday. We have an outside day down. It's not a key reversal. Why? Because you're going with the trend. The trend has been down. But if you take out that high, you often walk into a situation, if it's done in the next 2 days, that the market's going to try to make a run for the closest main moving average. You heard what I said. That's what I think it tries to do. And today you made first the lower low. You came back, you took that out. I am wrong in my analysis if today's low is taken out before this market makes a run for the moving averages. Now you'll say, well, Ira, are you bullish now? No, I'm no longer bearish. Huge difference between the two. So this leg to me is done because the market's under that 18-day average. I'm looking for sell signals, not buy signals. That's my master filter. And I'll let the other people buy it to drive it up there. It might go there. The other thing the market did, it's been riding the lower Bollinger Band, so it finally said, okay. And what else? It couldn't stay under it very long. I keep explaining to you how that works. People don't believe me most of the time, but I think my course is the best on this you're ever going to run into. Pretty strong statement. Now, here's what bothers me tremendously. You're still embedded. You didn't lose the embedded reading, which the other part of the equation, this is the battle that now you're facing, is this says you're supposed to be a seller on the rally until the red line closes over 21, and that you won't make it up there, that this is stronger than taking out that outside day. I'm caught. I admit it. I wait now for the next round to tell me what to do. What about the NASDAQ? You didn't lose the embedded rally here. So on my work, even though you have that outside day, even though the market came off the Bollinger Band, it is still the bears are ruling the day. If you lose the embedded reading, then I think you'll make your run to the 18-day average. So in my hierarchy, the outside day is nice, but it doesn't overrule the embedded reading. The momentum rules the day. Momentum is often ahead of price. Not always, but often, very often, momentum will lead price, and it tells you the right things to do. So far, the momentum is still bearish. Darn it, look at this one. It's the same thing. You haven't even broken the pattern of lower highs, lower lows. This is a rally in a bear market so far on all of these. I throw in the towel if you lose the embedded reading. It's pretty darn simple. When I come over to the Russell, is it the same thing? Well, you're at 20.5. Okay, but where did you close? You closed at 1558. You haven't closed over 21 yet. I don't know where tomorrow's going to close. You may know it. I don't know it. So far, it's still a bear market rally. And when we come over to the VIX, what the VIX did is it pulled back inside the Bollinger Band. You had 3 days in a row over it. The most you typically go is 5, and then you pull back in. It never embedded. It just got ahead of itself. I'm watching traders on TV going, oh, that's the sign. You'll notice it failed up here at the 34, 35. Well, number one, this was never capitulation. Okay, I don't consider that this act, capitulation will be when that VIX ideally gets now into the 40s. It's proven it can get up to these 30s and do an orderly retracement and give the stock market a rally. We've seen that. We saw it through the whole summer, right? Remember the June through the August rally? It was a heck of a rally that the market did. And the VIX was falling during that time, and then it started turning back up here. And if you'll notice, your stock market's been in the bear phase. So is this the end of that phase or not? The jury's not in. You got to just wait and see. But I'll rely on my good friend, the slow stochastics, to tell me. Now I look at the bond market. Okay, coming in, we had 2 days under the lower band. Well, that's not excessive, but there is a but. What did this market do in the slow stochastic? So we come in, and here's the close of business today, Wednesday. Did you lose the embedded reading? You certainly did. Out. Now the odds favor, unless you re-embed tomorrow, that this market is going back to the 18-day average. That's what the odds favor. I'd be wrong if you first get back under this low before hitting that 18-day average. Now, that 18-day average isn't going to stay there. It's going to drop each day because of the slope of the market. You can see that. And you didn't lose back that embedded reading. It won't take a lot. If the market lost back what it made today, you might re-embed. So I'm telling you, it's juggling balls in the air right now, and that's what you're looking at. What about the 10-year note? Let's take a look and see what we have here. Here we go. So here is the close of business today. What was the settlement? 22.9. Oh, if you were with me, I'd have said, okay, you've milked the market. This is likely the end of that leg of the downtrend. Does not mean you're going into an uptrend, but that leg, the easy money, is gone, that particular leg. And now you're waiting to see what next. You haven't given it back yet. We'll see what happens. But so far in the interest rates, my work is saying you don't want to be short anymore. Do I ever tell clients to buy under an 18-day average to get back to it? I tried it with this theory, and I wasn't happy with the end results. I found that I took too much heat mentally. I was fighting myself. I'm not certain it doesn't work. In the dollar index, well, we had a number of days here. Let's you and I count together. Day 1 of over the Bollinger Band, day 2, day 3, day 4, oh boy. Did we have 5 days in a row? No. What did I tell you? Every day I've said, it's rare you get 5 days in a row. You can, but you generally fall the next day. You can. It's rare. Go on the charts and count it. So I have been looking to see, would you get a correction here? Were you embedded? No, you've just been overbought. Could you have embedded? Yeah, but you needed to be up today in order to finish that off. And instead of that, here's what you did. Did it embed? It did. Even with this monster break, it embedded. So what will likely happen is the market will open steady to higher. It's my guess tonight. You'll lose the embedded reading, but you don't want to get what I call stochasticitis, which means you're guessing which way is it going to go. I always give the market the benefit of a little while. There's ways to do it. You're not paying me, most of you, therefore I'm not going to tell you how to do it. Be a subscriber of mine and I'll tell you. Be a paid subscriber. You can write me, call me, and I will explain it. Okay. In the euro, I look at the market. Okay. Had this market been embedded? Well, we can count. Let's just see. Oh, let's count. Where's the first day? That's the first day. Day 1 of embedding, both numbers under 20. Day 2 of embedding, this was yesterday. Most times you don't embed. Day 3, did you embed? You did. So today's going to be the key. Doesn't lose the embedded part or not. As you can see, early on, it is losing it. But again, this is the first day of losing it. Will the market stay down today? Will it come back down here? I don't know. I think the pros got out there. This is the first level of embedding. Would they have sold today? Well, that's another question. If you sold the rally, you're okay, but I don't know how else to have come in. I didn't tell my clients to do anything in the eurocurrency, and maybe it was a good move, maybe a bad, I don't know. The British pound has climbed back inside the Bollinger Band. That's all that really happened here. It was 1, 2, 3 days, 4 days under it. And on the 5th day, it got back over it. Okay, it's like 5 days of Christmas or something. So getting a bounce, lost the embedded reading. The odds favor, if something's going to happen here, the run might go to wherever the 18-day average is. Would I want to be short anymore? No. I'm locked out of this market. At the very least, I have an oversold market. At the best, we have a market that's lost its downside momentum, and you're going to get a bear market rally. Which one's going to happen? Because it's under the 18-day average, I'm not interested in it anyways. I've got you in the October Bitcoin simply because it's time to be away from the SEPs. They go off the board, I think it's Friday. So I've been having you in here. The volume is still in September, by the way, but you don't have anything. You got a sideways market that's going nowhere. Didn't even go with the stock market today. That was interesting. It didn't break with it the past couple of days, and it didn't rally with it. Now, I've switched gears for you, the December Brent versus December WTI. Russia has asked OPEC Plus to cut production in their quota at the next meeting by 1 million barrels a day. Now, that is not going to happen. But you can see the game plan. Russia blamed the United States also. We are the ones that blew up the Nord Stream 2 and sabotaged the pipeline so that we can send our natural gas there and take over the market from Russia. This is the propaganda that they're putting out. If you believe it, terrific. Okay, but what is going on here is you're still going to see OPEC's going to keep cutting production. They want to stabilize this market. They see a worldwide recession. Yes, you get bumps in a recession where you get these bounces and you're hoping that upon hope, that's it. The market's not going to keep going down. I don't see the Fed stopping. You might, I don't. I saw today, again, talks, Alpha on CNBC as they had the interviews and you were listening. It's going to be March. It's going to be June. Nobody knows. The whole key is we're going to first get our jobs data October 4th. Then we're all going to be waiting for the CPI number to see did it start falling. Then we'll get ourselves ready for the November meeting. The Fed will likely be somewhere between 50 and 100 points. Don't know where because we don't have enough data, nor do they. So all these people that are guessing, what's the difference between you and I taking the dart and we go into a bar and we have a beer together and we say, hey, it's going to be 50 to 100 and we throw the dart at it because that's as much as you're guessing with. No more than that. If the Fed knew, they'd tell you that they know. That's their job, certainty in the market. They don't know at this point in time, but I love listening to it. So on this rally, which is nice, you're correcting an oversold condition, you still have a lot of resistance. Even if you keep the rally going at 92, 91, you're back to the 200-day average. Goldman Sachs today lowered their year-end target to $100 a barrel. Now, Jeff Curry, who is a superior analyst, he's their head guy, and I've watched him. He hasn't been on CNBC in a long time that I've seen, at least. He was hoping for 125 and maybe higher by year-end, so he's lowered it. But they haven't really lowered that you're out of a bull market in the energies in any manner. It's stalled. If you read their notes, you understand what they're saying. In November WTI, you found your footing at the Bollinger Band. You're coming up. Here's a market. Is it oversold? It is. Any number under 30 is oversold in the slow stochastic. So I don't know that you'll get a lot of selling up there, but that is the resistance point. In the gasoline, I have been telling my traders every morning, putting, if you will, crosshairs on the chart, showing to them I expect this to be a bottom, You came down, I said it's just a test, and so far I've been right. Now let me tell you the other handle. I just think you're going to spin for a while. I don't think you're going anywhere. I think it needs to consolidate price to tell us what the next move is. Now, we've lost another refinery. I understand the big explosion last week that the contractors at the refinery in the U.S. were sent home, that this thing's going to be down longer than thought. That's bullish, not bearish. You're not going to get the supply you thought. Then in the nat gas, this is what I was telling my traders. I said, whenever you first hit a 200-day average, upside or downside, remember, that's a 4-year average, right? If you're on a weekly chart, it's a 1-year average on a daily chart. So when you get to it, I look to see how does it act in the past, what's it doing? It's an important moving average. And I said, I don't think the pros are going to sell anymore there. I think it's time to be away from it. Got a bounce today. I didn't say it's turned the corner, but that's what I was expecting. You're still embedded. Until you lose this reading, I don't think you're going anywhere. And I think that the market we ultimately want to look at is going to be the winter months. November is not a winter month to see where it's at. I've been watching some geniuses in the market, and they are trying to go back, and they're looking at January of the next year, but there's no open interest back there. And they are saying that's the one you want to buy because it was under $6, around $5.50, in fact. Okay, we'll see. Resistance back up there. So you put it all together, you try to come up with game plans. Are you going to be right all the time? Nobody is. But you have to have a plan. If you're like me, I'll give you an example. When I was brought up in this industry, I would go to a number of different services I would buy, and I wouldn't make a trade till I knew what those guys were saying. I'd wait at night before I tell my clients what we were going to do. And you died. Well, I want to be that guy to you. I put out my updates, my full research twice a day. So by 8 o'clock tonight, my written update with new recommendations will be done. 5:30 in the morning, there'll be my videos in the futures. And then at 11:30 to 12, I put out another written one, plus special updates if I think there's something we should move. I want to be your guy. So when you go to the website, you're looking ideally at the report that we have, just remember, you can just step over here and in the market research, click on, do you want to buy my research, my videos, whatever it is? I'd love to have you sign up. I'm Ira. You have a great day.